Hi everyone, welcome back to the channel. Mr. Market here. Today we're diving into a topic that every investor needs to know. The top 3 reasons you should sell a stock. Let's get into it. Today we're diving into a topic that's a little less glamorous than finding the next Tesla, but just as important, knowing when to sell a stock. Look, we all love the idea of buying low and selling high, watching those gains roll in. But holding onto a stock for too long, even for the wrong reasons, can be like leaving your money on the table, or worse. So, buckle up as we break down the top 3 reasons why you might consider hitting that sell button. Trust me, understanding these reasons could save you from some serious investing FOMO and potentially make you more money in the long run. Okay, let's talk about opportunity cost. Imagine this. You've got some money sitting in a stock that's been chugging along, maybe giving you a measly 3% return each year. Not bad, right? Well, not so fast. And what if I told you that there are other stocks out there, potentially in booming sectors like tech or renewable energy, that are averaging returns of 10%, 20%, or even more? Suddenly that 3% doesn't look so hot, does it? That, my friends, is opportunity cost in action. By clinging to that mediocre stock, you're essentially saying no to potentially bigger and better opportunities. It's like choosing to eat ramen noodles every day when you could be having a 5-course meal. Think about it. What if you had held on to blockbuster stock because you were sentimental about those weekend trips to the video store? You would have missed out on the meteoric rise of Netflix and the entire streaming revolution. Or imagine sticking with Nokia because it was the reliable choice, only to watch Apple completely dominate the smartphone market. Don't let nostalgia or fear of missing out on those small gains keep you tethered to an underperforming stock. Sometimes you need to cut your losses and free up your capital to chase those bigger, bolder opportunities. Trust me, your portfolio will thank you for it. All right, let's talk about reason number 2 to sell a stock. When the company behind those ticker symbols starts showing some serious cracks in its foundation. Remember, when you invest in a stock, you're not just buying a piece of paper, you're buying a piece of a business. And just like any business, things can change. And sometimes those changes aren't pretty. Imagine this. You've invested in a once thriving retail company, but then things start to shift. Maybe a new CEO comes in with a questionable track record. Their once popular products start getting slammed in reviews, and competitors with better offerings pop up left and right. Suddenly, those for-lease signs start popping up where their stores used to be. These, my friends, are fundamental red flags. They're signs that the company's story is changing and not for the better. Remember, investing is about backing winners, not clinging to sinking ships. Chapter 3, life happens when you need cash, not stock certificates. Now for our final reason to sell a stock, and this one hits close to home for a lot of us. Sometimes life just throws you a curveball and you need cold, hard cash, not stock certificates. Look, investing is important, but it shouldn't come at the expense of your financial well-being. Unexpected expenses can pop up out of nowhere. A medical emergency, urgent home repairs, or maybe you need to support a family member going through a tough time. And let's not forget about those big life goals, like putting a down payment on a house or finally taking that dream vacation. In these situations, liquidating some of your stock holdings might be the smartest move, even if it means selling at a less than ideal time. Remember, your investments should work for you, not the other way around. There's no shame in prioritizing your immediate needs and goals over potential future gains. Plus, think of it this way. By selling some of your stocks to cover those unexpected costs or achieve those important milestones, you're avoiding going into debt or depleting your emergency fund, which can save you a lot of stress and financial headaches in the long run. Bonus reason: market conditions. Sometimes the overall market conditions can signal a good time to sell. But once you've sold your stocks, the question arises, where should you put your money? One option is a savings account. It's low risk, but the returns are often minimal. Savings accounts provide liquidity and safety, but inflation can erode your purchasing power over time. Bonds are another option. They offer more stable returns than stocks and are generally safer. However, the returns can be lower, and they are subject to interest rate risk. Real estate is a popular choice for many investors. It can provide rental income and potential appreciation, but it requires significant capital and can be illiquid. Other investment opportunities include mutual funds, ETFs, and commodities. Each option has its own set of pros and cons, so it's important to do your research and consider your financial goals. Diversifying your investments can help mitigate risks and provide steady growth over time. This strategy, however, can be tricky because timing the market is hard. Time in the market beats timing the market, and it's often better to focus on long-term strategies. If you liked the video, please consider subscribing. Happy investing, and see you in the next video.